Quant dropped to $70 last week. Third time testing symmetrical triangle support since April. While most traders see consolidation, the Heikinashi RSI tells a different story. It just printed its first green candle after 5 consecutive red ones, matching the exact pattern we saw before the last 2 major rallies in July 2024 and April this year. But here's what changes everything. While price consolidated, Quant secured partnerships with HSBC, Barclays, Lloyds, and Santander to build the UK's tokenized sterling deposit system. Today I'm breaking down why this technical setup, combined with institutional adoption, creates a compelling risk-reward at current levels. QNT token sits around $90 after testing triangle support twice in October and November. We're inside a symmetrical triangle that's been forming since early 2024. Price is getting tight, and resolution is coming. The token was up to $170 in December 2024, which was a pretty significant peak, but crashed to $58 in April, and has been consolidating ever since. Right now we're below all major moving averages, the 10 and 21 EMAs, the 55, the 100, and even the 200 SMA. This looks bearish on the surface, but that's exactly when smart money accumulates. Market sentiment is cautious, retail is quiet, and institutional news is breaking in the background. This creates asymmetric opportunity. The fundamentals tell us why this consolidation matters, so let's start there. 3 major developments converged in the past few weeks that most traders missed. First, Quant CO joined senior representatives from LSE, BlackRock, Peel Hunt, Nality UK, and Hogan Lovells at the Infin Finance FinTech Forum in London. They discussed how digitalisation of capital markets strengthens the UK's global leadership in financial services. This isn't speculative. It's Quant sitting at tables with the largest financial institutions in the world. Second, and this is massive, Quant was selected to build the UK's tokenized sterling deposit system. Partners include HSBC, Barclays, Lloyds, and Santander, the UK's biggest banks. Quant is at the center of the future of money. QuantNet provides real-time atomic settlement between tokenized cash and assets, cross-bank payment versus payment for digital deposits, and automated lifecycle management for structured trades and finance flows, all within existing banking infrastructure. They're not replacing banks, they're making them interoperable. Third, Elon Musk liked a post discussing why X should integrate Quant's Overledger for payments. The thesis: as X evolves into an everything app, Quant's Overledger serves as an interoperability layer enabling seamless connectivity across diverse blockchain networks. Imagine instant cross-border remittances. Someone in London transfers funds to Lagos using their preferred cryptocurrency, with automatic conversion and settlement across chains. Or micropayments for content creators rewarding viewers for watching video streams, executed without intermediaries. This integration would let X compete with PayPal or Alipay, but with decentralized finance versatility. These are not random hype announcements. They represent systematic institutional adoption, governments, banks, and potentially major tech platforms building on Quant's infrastructure. That narrative shift matters because it changes the fundamental thesis from speculative crypto project to critical financial infrastructure. Let's zoom into the weekly chart. I'm anchoring Fibonacci from the $170 high in December down to the 58 low in April. The 382 retracement sits at 100. Notice how that's exactly where the descending trend line of our triangle hits. That level acts as dual resistance. The 618 retracement is at 130, which becomes our first major upside target if we break out. Current price structure. We tested triangle support at $70 in October and November, held both times. Price is now compressing between 80 support and 100 resistance. The volume profile shows point of control at 105, which acts like a magnet. If we break above 100, that point of control becomes the target before the 618 fib at 130. Moving averages tell the macro story. We're below the 10 and 21 EMAs, those blue lines on the chart, below the 55 EMA in purple, the 100 EMA in yellow, and the 200 SMA in green. This is full-on downtrend territory. But here's the thing. The best entries happen before moving averages flip. By the time the 55 crosses above the 200, the move is already halfway done. Now the Heikinashi RSI. This is where it gets interesting. Look at those white circles I marked on the chart. RSI hit extreme oversold, just like it did in July 2024 and April. Both times, when RSI reversed from oversold, price rallied significantly. We just printed our first green candle after 5 consecutive red ones. This doesn't guarantee reversal, but it shows momentum shift is starting. We need a strong weekly close on Sunday to confirm this setup. For me, my load zone is $75 to $100. I established this back in September on my last quant video, and price is working inside it exactly as I expected. My stop loss is a weekly close below the triangle. That invalidates the structure. Doesn't mean quant can't recover long term, but I would be out of this position. If we break down, I'm looking to reaccumulate around $50. Take profit targets: $130, $170, $240, $350, and $460. I'm trimming harder at $130 and $170. Those are the high probability targets. Beyond that becomes more speculative, but if institutional adoption continues, those levels are in play over 3 to 12 months. Synthesizing this, fundamentals show accelerating institutional adoption with major UK banks and potential integration with X. Who knows? Technically, we're at symmetrical triangle support with oversold momentum starting to reverse. My best case: we break above $100, reclaim the 382 Fibonacci, and move toward 130 relatively quickly. Volume profile point of control at 105 gets tested, and if we hold above it, momentum carries us to the 618 fib. Worst case, triangle breaks down, we retest 58 lows or go lower toward $50. For the long-term holders, this remains accumulation territory because the fundamental story keeps improving. Short-term traders need the triangle to hold. Timeline: if we break out, I'm expecting $130 in the next 6 weeks. If we break down, reaccumulation phase extends into early 2026. And what changes my thesis? A weekly candle close below $50 or fundamental reversal, where UK banking partnerships fail to materialize. Quant around $90 sits at a decision point. Symmetrical triangle support with institutional tailwinds building in the background. This setup combines technical compression with fundamental catalysts that most retail traders are not watching yet. If this analysis helped clarify the setup, punch the like button. It helps the algorithm share this with others who would benefit. Join my free Telegram group for faster daily updates. Link in the pinned comment. I've been tracking quant since February, so watch my previous videos on screen and dive even deeper. This triangle resolution will determine if we're headed to 130 or back to $50. Position accordingly. Thanks for watching, never financial advice, and I'll see you tomorrow in the next one.